Yeah. Good day, guys. It's been a while. I had a video with us uploaded. So today's video is going to be awesome. It's going to be an update on the zigzag strategy, and this is going to increase your win rate. A lot of stuff is being on ground. More videos are going to be uploaded on some update on my Forex strategy, how to catch a smaller peep and make how to make 100x, your capital in a week. You just need to have, let me not say that. All right, so I'll just go straight to the point for this particular video. Now, this video is going to, remember, we are going to be trading. This is pocket option and the zigzag strategy I uploaded the last two videos. A lot of people made a lot of money, I mean a lot. So I'm just going to update this for some people who wants more confirmations on their entry. Remember, we don't use martingales on on each of these entries. Where we are going to be using only uh, percentage based rules. All right, so I made a rule on this entry or this strategy, so I'm going to share this with us. So let me just zoom in. So rules for entries for buy, look for trend using zigzag. So before I even show you this, let's just explain. So remember, on the last video we said when you see a break, a body break like this, you take a trade, right? Yeah, and you used to candle expiring, which this would have been a winner, right? And this for a sell. The recent high and low, this was a sell, candle broke it, and this would have been a loss, a lose, whatever. And this is the next high, this is the next low, price broke it. Anyway, that was that. Now for this new method, first of all, you need two indicators. The zigzag, the settings are the default settings, all right? And the stochastic oscillator, the settings are this 323 SMA style, blah blah blah. So you can see that. Once you get this done, remember each zigzag high is like a swing point. What are swing points? They're like where liquidity are. I'm not going to go deep on all of that information, but swing points are high and low. So when you see body closure means break of structure. All right. So for this point, price broke this with body. So let's see if I can have a okay, let's use this horizontal. So price broke the body, this lowest place with this body. All right. So once you see this body break, you remember our normal entry will have entered at the close. For we now, for what we're going to be doing now is once we see that, we know that we are already in a bearish trend. We'll now start looking for only sell trade until the zigzag gave us or gives us um, another high and low. But if the lines are still straight, we know that we are in a bearish trend. So how do we take a sell? Very simple, guys. You want to see green cross red to the downside, okay, for sell. And please note, the green must go high a bit, not this type of crossing. It has to be not even like this is still subjective. At least this from here to this point, like from here, you have to go a deeper inside, like this deep, okay, deep inside. All right. So you remember you're using percentage risk now. So once you see the cross of the red in a sell trade, okay, you take a sell trade. Now you don't take a sell trade if the candle that cross it is a bullish or green color candle in a sell trade. I'll show you an example in once I'm giving you more examples. So this is an example. Price got to this point, but price closed here, and yeah, the candle crossed it properly here. So you take a sell at the close of it, and you enter this is 30 minutes chart. Okay, so you can use it on any chart. All right, but make sure that whatever chart you use it, you have to use 2 times the candle for expiring. So for 30 minutes, your expiring is going to be 1 minute. All right, so close here, 30 seconds, 30 seconds. Then that is 1 minute. So this is a win trade. You look for another sell trade. So this went high. So this went high and cross it here. And you take another sell trade. This is a win trade, number 2. So that's how you just keep going. Then price went high and boom, price crosses here. So this would have been a losing trade. Now there's a rule on when to stop trading. All right, that's a losing trade. This is another winning trade. Price went high above it, green cross red. The red cross properly on this candle here, and boom, you take your entry here and wait for 2 candle expiring and price closes here. So that's how you just keep doing sell for this trend. So far we had about 4 wins, 1 lose. Another win here. Price closes here. Price went high and close below green cross red, and boom, you take a sell and you win 2 candles. So it came up here. This would have been your entry even if this green didn't lose. All right, so that would be your entry. Let's see, did you win here? So now, this is an example of what I was saying. You don't take a trade where the cross is from the green candle. Like, see now, this is a green candle and the cross happened on a green candle, and you're looking for a sell trade. You will not take a sell trade on this particular entry. So when do you stop trading? You stop trading when the zigzag, in live charts, it will not show until probably around this area or thereabouts, somewhere around there. So you just see the zigzag has changed, meaning a new structure is being formed. So you start looking for a break of structure to confirm which if is bullish or bearish. So price broke it to the downside. You start looking for a sell again. But what the price did, price went high and formed another structure. So you have a new structural high and low. So it's gonna be a high and lows, but price continued going downward. And price went down, and yeah, price went up and closes here, yeah, closes here, and you take a sell and you win. So far we had about 7 win, 1 loss so far. Then this would be your new high. This is your new high, this is your new low. What I want to look for a buy trade. So let's look for a buy trade. Let's see. So for here now, this is the new low. Price broke it, boom, and price started going up. So let's see, is there, so for buy trade, you want to just look for only buy uh exit. So on a live chat, you might want to take this, okay, maybe because you might see it because you might see this as a bullish trade. So this might be a losing trade. So let's see. This is also a close call, so it's around here. So it might be losing trade or a break-even trade. So that is that on that. Now let me quickly show you the rules. The rules is very simple. For a buy trade, or a buy setup, look for a trend using the zigzag recent high break with candle closure or candle body closure to confirm a bullish trend, which is this point I just explained to you guys. This is a recent high, this is a recent low. Price broke it for a low, but I'm looking for a buy. Then once the body closure happened, which was somewhere around here, they even said it was this, then we know that we're not bullish. All right, so we're not looking for bullish trade. So what's the next rules? This rule you must follow them for you to be profitable with this strategy. Look at the stochastic area for green cross red. Note the cross must be in a green candle, not red, just like as I explained. So you want to see a green cross red. Let me just quickly look for a good buy example. Let's see. So if the videos are or the video is getting too long, I just want you guys to understand this. So let us assume, no, I don't want to assume. I want something perfect. This market has been a seller market. It's let's see. It has been a seller market. It's crazy, man. All right, so this is a perfect bullish market. So good body closure, a recent high, confirm a bullish trend. Now you want to see green cross red above, green cross red above. So you see green cross red, you win this trade. So let me. All right, so this would have been a winning trade or close to winning trade. Yeah, yeah, this would have been a winning trade if this wouldn't get to it. So green cross red here. Let's see if there's another setup. Yeah, this would have been a setup, but this would have been a losing trade. Why are they losing? Why are the why are the sell trade are just losing? Maybe because this trend is bullish. All right, so this is a beautiful bullish win. All right, so boom, this is a green cross red bullish. I'm showing you this example because I want you guys to understand it properly. Then use two candle expiry for the entry example. Example, 1 minute chart, you use 2 minute expiry. So which is we're using 30 minutes chart, you can see 30 minutes. You can use any time frame of your choice. So 30 seconds, let's say 30 minutes, 30 seconds chart, then 1 minute expiring. So that's what it means. So it means that when I take my buy trade on this candle, this each candles are 30 seconds. So this 30 seconds is this second 30 seconds. So two candles expiring. So that's what it means. So any chart you use, make sure you use two candles expire. Then vice versa for the sell. Look for a trend using zigzag, recent low break, which was the example I gave earlier on. We want the video to see the buy. Sorry, the sell examples. And okay, I can just show you one more if there's any sell. All right, so let's see. Sell, break, boom. So this is a sell trade. So once this break body closure on the recent swing high and swing low of the zigzag, we now know that we have a sell, a bearish trend, and we want to see a green cross red to the downside. So this is green cross red to the downside, and boom, this is a sell winning trade. So that's that. And remember to count the expiry for 1 minute chart, 2 minutes. Now risk management, risk percentage base. Okay, risk percentage, not dollar base, not dollar base. So what I mean by not dollar base is that always use percentage base because this way you you compound your capital as you make more money. Okay, so if you use a dollar base, you don't really compound and tend to lose, and there's no growth with it. But percentage, the more your capital increase, the more it uses the 2.5% of the capital. If you're losing, it uses lesser amount. So that way it makes a lot of sense to use percentage base, and can be 1 to 10%, based on your capital and your risk tolerance. Remember, this is not financial advice, and this you can lose all your money. So just know all of that risk involved. Then stop trading. This is very important. Stop trading when you have 5 losing trades in a row of a session, which is 4 hours. Come back either 4 hours time or the next day. So what this means is that if you have, let's say you take a trade, you took a trade here, you lose. You took another trade, you lose two. You took another trade, you lose three. You took another trade, you lose four, and you took another trade, you lose five. That is what we call 5 losing trades in a row. Not like you win one, you win the next one, you win the next one, the third one, you lose the fourth one, you win the fifth one, you lose the sixth one. You know, if it's win lose, not necessarily. That's not what I mean by losing trade in a row. Losing trade, you are just losing continuously, no winning at all. So once you have these losing trades in a row, you stop trading for that session. Then target is subjective. It can be, you can target 10% daily, you can target 50% daily, or you can target 100% daily. It also, you can also say, okay, I'm going to stop trading until I have 5 losing trades in a row. So maybe you have made a lot of profit in that day, and you say, okay, I'll stop trading when I lose 5 times. All right. So anytime you lose 5 times, you can just say, okay, I'm no more trading for that day, or I'll come back 4 hours time if I still have time to trade on my time on that day. Or you can just say, okay, I'll come back the next day. So this is it. This is version 2.0 of the zigzag strategy that increase your win rates. Ask your questions. More examples of videos will be pulled out. More live trading will be pulled out. More withdrawals. I hope you guys are gonna make more money as you did on the last one. Thank you so much, guys, and have a beautiful time. Take care of yourself.